Hi guys, this is my day 18 of self improvement. Yesterday I finished the book named Atomic Habit written by James Clear, and today I am going to my academics. And today I am going to revise section number 5 of the FEMA Foreign Exchange and Management Act 1999, which is a chapter of my uh, corporate law subject of CA Inter. So I'm going to revise it. So section 5 deals with current account transaction. What is current account transaction? So current account transaction means the transaction other than capital account transaction. First of all, what is capital account transaction? Capital account transaction are those transactions which results in the alteration of the assets, liabilities or contingent liability of a person in India. Sorry, let me repeat it again. Capital account transaction means a transaction which alters the asset, liability and contingent liability outside India of a person resident in India, or and the assets and liabilities in India of a person outside India. So this is the definition of capital account transaction. Now, what is the definition of current account transaction? Transaction other than capital account transaction, but it is not so simple. It includes the line like without prejudice to the generality of the definition. It includes payment with respect to foreign trade, business service, short-term credit and short-term banking and credit facility in the ordinary course of business. Second, payment with respect to interest on loan and as a net income on investment. Third, pay remittance of living expenses of the spouse, children or parents living abroad, remittance for the expenses related to foreign travel, education and medication of spouse, children and parents. So this is the definition of current account transaction. So section 5 deals with the current account transaction and it has 3 schedules. Schedule 1 talks about the transaction which are completely prohibited. That means no person can these are transactions are prohibited, which means no person can draw foreign exchange from authorized person to do these type of activities, which is mentioned in the schedule 1. In schedule 2 it talks about the transaction which are restricted, not prohibited but restricted. That means a person if want to do those type of activities that are described in schedule 2, then he or she have to take first permission from the central government, and then he is allowed to take a foreign exchange from the authorized person to do that activities. And third schedule is finally deals with a individual transaction which a person is restricted to do. If a person want to do this type of these activities, then he has to first take the approval from RBI, not the central government. Here the person have to take the approval from RBI, and there is a prescribed limit. We talk about it later. And if a person want to do activities that are mentioned in schedule 3, then first he have to take the approval from RBI, and then he is allowed to draw the foreign exchange. So let us start section number 5. Section 5 states that an individual can draw or sell foreign exchange from an authorized person if such sale is such sale an individual is allowed to sell or draw foreign exchange from authorized person. This is the first line. Second line, central government with consultation with RBI may impose reasonable restriction on the transaction of current account transaction. Second, third is the examples of current account transaction, like import from what can I say? Suppose I take I gave a gift. I have given a gift of dollar 1000 to a person resident in America. So by giving $1000, it does not create any asset of a person residing in the America. It does not create any asset. Suppose I am the person a resident in America, resident of America, and I have received $1000. I have does not receive any. It does not create my asset outside my country. I get a dollar 1000, which is a currency of my home. So it does not create any asset for me. Thus it is not a capital account transaction, it is a current account transaction. So this is an example of current account transaction. Now schedule 1 talks about the transaction which are prohibited from doing. That means a person cannot take draw cannot draw foreign exchange for doing these type of activities which are mentioned in the schedule 1 of the section 5. So let us start one by one. What are the transactions that are prohibited in the schedule 1? The first is remittance out of lottery earnings. Second, remittance out of riding, racing, or any other hobbies. The payment Third is payment for the purchase of lottery tickets, band magazines, football pools, and sweepstakes. Fourth is remittance of interest by a company to whom dividend balancing scheme is applicable. Fifth is remittance of interest income on the funds held in non-resident special rupee account scheme. Sixth is payment related to callback services. Seventh, payment of commission on export by a company to whom point number 7, payment of commission on export made towards the equity investment in the joint venture or wholly owned subsidiary abroad of Indian companies. And last, 8th point is payment of commission on export under RSCR, Rupee State Credit Route, except 10% except the 10% of the value of the goods that are exported, except 10% of the value of the export of trade tea and tobacco. This is 8 point. This is section schedule 1. Now I come to schedule 2. Schedule 2 talks about the transactions which are not prohibited but restricted. There is a difference between prohibition and restriction. Prohibition means complete ban. No person is allowed to do that transaction. But restriction, that it is prohibited to a certain limit. And if you take the permission from a central government, then you are allowed to take foreign exchange from the authorized person to do that activity. So there are list of one side there is a list of activities, and the other side is the list of departments of the government from which you have to take approval for one nature of activity. You have to take a particular approval from a particular department. So there is a two terminological table. The first is cultural tour, and the department for which the permission is taken is Ministry of Human Resource Ministry of Human Resource Department, and its Ministry of Human Resource Development, and its department is Department of Education and Culture. First, cultural tour, Department of Education and Culture, Ministry of Human Resource Development. The second one is remittance for the purchase price or sponsorship of sports activity abroad by a person other than international, national or state level sports body if the amount allowed exceeds $1 lakh. Then the approval is taken by a Ministry of Human Resource Development, again same ministry, and Department of Youth Affairs and Sports. So these are the 2 points. Third point is remittance for the freight of vessel chartered by the PSU, and the approval is Ministry of Surface Transport Chartering Wages. Department's name is Chartering Wages. And next, fourth one is payment on import through ocean transport by a government department or a PSU in CIF basis, that is cost limit CIF basis. And the department is ministry is the Ministry of Surface Transport, again same, and the department is also same, Chartering Wing. Then the fifth one is multimodal transport operator making remittance to their agent abroad. So this is the name of the activity, and the permission is taken again from registration certificate of Directorate General of Shipping. This is the fifth. Now sixth is remittance for the deterioration in the container detention charges. Remittance for container detention charges if the rate exceeds the rate given by the Directorate General of Shipping, again the same, and the approval is also taken from the same department, which is Directorate General of Shipping, and it comes under the Ministry of Surface and Transport. And the next one is remittance for the higher charges of transponder. For it has 2 points. For TV channels, it has to take permission from Ministry of Information and Broadcasting, and for internet service provider, he has to take permission from Ministry of Communication and Information Technology. Now the next one is ministry advertisement in the foreign print media by state, mark the word, state government or its PSU, up to the amount of rupees $10,000, except when such advertisement is for international bidding, foreign investment and promotion of tourism, and the approval is taken from Ministry of Finance, Economic Affairs. And the last one is remittance for the membership of P&I Club, that is Protection and Insurance Club. So this the approval of this is taken from again Ministry of Finance, and the department is Insurance Division. So these are the 9 transactions in Schedule 2. In Schedule 1 we have 8 transactions, and in Schedule 1 we have 8 transactions. In Schedule 2 we have 9 transactions. So there is also Schedule 3, and I think this is enough for this video. I'll do it again tomorrow.